In this video, we will learn how to trade with the trend. In stock market, it is said that trend is your friend. You trade with the trend, you make money. You trade against the trend, you lose money. Trading against the trend is like swimming against the tide. Swimming against the tide is very risky. Similarly, trading against the trend can be very risky for your capital. You may lose all your capital in trading. So you need to decide. If you want to make money, you can trade with the trend. On the other hand, if you want to lose your money, you want to burn your money, you trade against the trend. Here I'm not saying that you always lose money when you trade against the trend. But to make money trading against the trend, you need to know when to trade against the trend. I will come out with another video how to trade against the trend. But as of now, in this video, we will learn how to trade with the trend and make money. So let us begin. There are three types of trend: uptrend, downtrend, and no trend or sideward movement. So this is an example of uptrend. Here price is moving with higher highs and higher lows, or higher tops and higher bottoms. We can see that each subsequent high is higher than the previous highs. Also, each subsequent lows are higher than the previous lows. So H2 is greater than H1 and H3 is greater than H2. And this uptrend can be measured or confirmed by a trend line. Next, we will move on to downtrend. Let's have a look at downtrend. In downtrend, subsequent lows are lower than the previous lows. Like L2 will be lower than L1 and L3 will be lower than L2, and so on. Also highs will be lower than previous high. So in downtrend, lows are lower and highs are lower. So lower highs and lower lows. And to confirm the trend, we will draw a trend line. It's a falling trend line and should be drawn above the price action. In the case of uptrend, it should be drawn below the price action. Moving on to sideward movement. So in sideward movement, neither highs are higher nor the lows are lower. They are more or less similar to each other. All the highs are almost similar and all the lows are almost similar. So now we know there are three types of trend: uptrend, downtrend, and sideward movement. In the previous three charts, we have seen smooth price movement. It was very easy to identify the trend and trade accordingly. But in real world, the price action is not so smooth and it is not always easy to identify the trend. Like in this chart, it's an uptrend. We can see that price is moving higher with the higher highs and higher lows. The highs are higher than previous highs and lows are higher than previous lows. The highs and lows are also called as swing highs and swing lows. So now we have the downtrend price action. We can see that price is moving lower with lower highs and lower lows. This is an example of sideward movement. In this chart, we can see that price remained within a range. In the previous sideward chart, we saw that the chart was very smooth and it was very easy to understand that price is in sideward movement. But in this chart, it is not that smooth, and you need to understand that price action will be like this only. There will be a lot of imperfection in the price action, but as the beauty lies in the eyes of the beholder, you need to identify the proper trend. In an uptrending market, what do? You buy fast, then sell. Buy at lower level, sell at higher levels, right? In downtrending market, you sell first, then you buy. So you sell higher, then buy lower. But in sideways market, what you should do? In sideways market, base trading is to avoid trade. No trade in a sideward market, because price is not giving you the direction of trade. Why should you trade? It is very risky to trade within the range. However, consolidation phase ends in a very strong price movement. In this case, we can see that once price broke above the consolidation high, price moved higher, and the trade should be on the side of the consolidation breakout. Like in this case, price have broken above the high up the consolidation, so it's a buy call. So now you know how to identify the trend, right? When the price is in higher top and higher bottom formation, it's an uptrend. You need to confirm that whether the trend exists or it has ended. To confirm it, you need to draw a trend line in an upward chart or upward price action. You should draw a upward rising trend line below the price action. As long as price is trading above the trend line, it is said that price is an uptrend. In the case of downward market, right above the price action, and as long as price is trading below the trend line, falling trend line, it is said that the trend is downwards, and you keep on selling as long as price trading below the trend line. Now question comes, how to draw a perfect trend line. Once you have decided the time frame, the next step would be finding two significant swing lows or highs. Adjust the trend line using logic when required. So this is an example of perfect trend line. In this chart we can see that we have taken two significant swing lows and drawn a trend line. See, over here price came lower, and just above the trend line it started to rebound, and it rebounded to very high levels, even it surpassed previous high. So this is the magic of trend line. One more thing we need to know, how not to draw a trend line. It should not be too steep or too flat. Trend line on the wrong side. Too many trend line contradiction. One need to remember, steeper is the trend line, lower will be the significance. Let us do a case study. We have the chart of Bata India. It's a monthly chart. The chart is from 1995, and what we can see that price has remained within a range till the middle of the 2009, and then there was a spike. So to confirm the trend, we will draw a trend line, right? So it's in long term uptrend, but at the same time price has rallied a lot. We will draw a bit steeper but significant trend line so that we can find out medium term trend. Now we have taken two significant lows and found that price has reached medium term support line. So one can think of buying the stock with a stop loss of the trend line. If we move on to more shorter view, like medium to short term view, we will look into the weekly chart of Bata. So we find the price has broken below the upward rising trend line. So the upward trend for the short to medium term has ended. Now it's in downtrend. In the daily chart, price is in downwards trend. The highs are lower. Move on to more closer view. It's the hourly chart. In this chart, we can see that price once moved above the falling trend line, means it was a bullish reversal. But reversal got failure because the larger trend was on the downside. It gave a breakout on the hourly chart, but it was in downtrend on the weekly as well as daily chart. So failure may come when there is a trend contradiction. Moving on to the next chart. This is the chart of dollar index. In this chart, we will draw upward trending line. The price has not given a breakdown of the trend line. Now once it breaks below the trend line decisively, it will move down and your trade will be sale. And if you trade seeing this chart only, you have to have a stop loss of the trend line. Once the trend line is broken, you need to exit your long position, or you can add short position when the trend line is broken. In this chart we will draw a trend line. The price is in upward movement, but at the same time we need to see that how much higher it can go. We need to draw a perfect trend line. On the higher end, you take a buy position keeping a stop loss just below the trend line, and on the higher end you need to know how much price can move higher. So for that you need to make a trend line above the price action just by joining two significant points. Here I have found that on the higher end how much price can move. In that case, if you think that the risk and reward is not perfect, like if you have the risk of 1 rupee, you have to have a reward of 2 rupees. So if you think that there is the risk and reward ratio is not right, you don't take a trade. In this chart, it's a downwards moving chart, and we have found two significant point to draw it falling trend line. Now what we can see that the trend line has been broken by the price has moved above the trend line, and buy call can be generated. Your stop loss will be here at the previous swing low, and targets can be this one and this one. Now you will draw a chart where the price has fallen below upward rising trend line and witnessed a steep fall. So here we are drawing a falling trend line on a falling price trend, and it's a real-time drawing. And you take a long position, keeping a stop loss below the trend line. One thing is that if you take a position on the breakout point and you keep a stop loss just below the breakout point, it will trigger stop loss very easily. So filter it out with a more reasonable stop loss. So if you have entered a trend reversal trade, you keep a stop loss below previous swing low or below previous consolidation. In this case, SBI has given a breakout and consolidated a bit, then moved higher on the next day. We'll look another chart. It's a chart of Nifty. We will draw a rising trend line. Now what we can see, price is broken below the rising trend line and witnesses severe fall. So previously it was a support for the price. When the price was above the trend line, it was a support. Once it is broken and price fell below the trend line, the support have become the resistance. In technical analysis, supports becomes resistance and resistance becomes support. It's a very recent chart. Nifty has been finding resistance at the trend line. It has been the fourth week that Nifty is struggling to move above the trend line. So what will happen? Will it rally beyond the trend line? Will it give a breakout above the trend line? It will fail to move beyond the trend line, and the downside will resume. Once it sustains above the trend line, it will move higher towards the previous swing high, in that case 12,400. Or if it fails and starts fall towards the lower level, we will see price correcting towards the previous swing low. So anything can happen. So we have reached towards the end of this video. Hope this video will be useful and you will learn something from this video.